Hey, this is Marjorie, and this is uh, probably the most important video that I have done ever. And I wanted to talk to you. What came out of this was a conversation my friend Sandy and I were having, and she goes, "What do you think, Marjorie? Are we going to just continue this slow grind down, or is there going to be a sudden collapse?" And you know, it has been a slow grind. It's actually been a slow grind for many, many decades, to be honest with you. I'd say in the last 5 years, the grind has really begun to accelerate in terms of its intensity and pressure and impact on people. But it's still a slow grind, right? You can still go down to a coffee shop or a grocery store and things other than some bare shelves and a lot higher prices. Things are looking kind of okay. And so I've been looking for an answer to that question, and I have it here. And I want to talk about the work of David Rogers Webb with The Great Taking. And I'm going to whip up, I've got a bunch of notes here because I want to make sure that I get this correct for you. So um, here we go. By the way, his book, it's called The Great Taking. Go to thegreattaking.com. He has the book. It's for free. It's an easy read. I knocked it out in 3 hours. There's also lots of interviews with him on YouTube, so you can get the gist of this pretty quickly. But I decided to interact with Grok on this one. Grok is probably the most woke of the AIs. Like, it's definitely mainstream. I mean, Elon Musk and those guys, like, they're pumping out their narrative, right? So, and I was willing to work with that. I just, that's just happens to be the AI I'm using right now. I'm going to ditch that one pretty soon. But I said, hey, Grok, summarize The Great Taking. And I'm going to read this to you so you have a really quick summary. It's a book that exposes a meticulously planned scheme by the central bankers and financial elites to seize massive amounts of collateral. Oops. Oh, that's a reminder to that this moment is wonderful. I set my phone every hour to remind me of that. So hopefully you'll take a moment and just like tap into how wonderful this moment is. Even though what we're going to be talking about is the end of the world as we know it, we should still have a good attitude about it. Okay, so it's a meticulously planned scheme by the central bankers, and they're going to take massive amounts of collateral from the public during the collapse of a global debt supercycle. And he draws on his background in finance and hedge fund management. Oh my God, his background is amazing. It's in the book. You don't have to read the first part, but I really recommend you do. You'll be very impressed with this guy. Webb argues that this is the end game, and it involves the systematic taking of essentially all securities. So it's going to be your stocks, your bonds, your retirement account, IRAs, 401ks, um, more bank deposits, all your money in the banks, debt financed properties, that be your car, your house, your boat, whatever you have financed and that has some sort of a mortgage or a bank loan on it. He contends that this has been enabled. Let's see, where am I going here? Um, I lost my pace. Through decades of legal and regulatory changes that have been quietly eroded true private property ownership. And, according to David, this has been going on for at least 5 decades that they've been working on this. So they've been doing a process called dematerialization. Doesn't that sound good? Kind of makes you think about Star Trek, Let's get into the transporter. Something like that. So the idea is they move from physical certificates, right? It used to be when you bought shares in a company, you actually got physical shares. Now it's all electronic. Harmonization of the laws across jurisdictions. And by the way, they have been setting this up every single country in the world. And harmonization is they've set up all the laws to be exactly the same. And they've set it up to where when there is this big debt supercycle implosion, all of the assets of the bank, instead of it being yours, instead of it being the depositors, it's written in the fine print that it actually goes to the central bank. Imagine that. So anyway, the harmonization of laws across jurisdictions and the centralization of collateral management via central clearing houses. So that means they've built these central clearing houses. So like every time you do a stock trade, it goes up through that and then back down again before, and it happens so fast, it's all electronic now, but they have these gigantic places where all these assets will be funneled into. Um, the legal framework has been constructed to allow these entities, ultimately controlled by the central banks, to claim all the collateral in the event of a widespread financial institution failures. Like, okay, so there's going to be widespread financial institution failures, and you thought you owned that house or that boat. Ain't gonna happen. They're gonna take it. So I said, Grok, is Grok a boy or a girl? I think Grok is transgender. Oh my God. Let's not go there. All right. I asked, are the banks doing this intentionally? And, what about, there's the story of J.P. Morgan who cut the loans and precipitated the 1929 crash. So there is a story, J.P. Morgan invited Winston Churchill to the viewing gallery above the New York Stock Exchange. And he was there in the morning during the 1929 crash. And the reason JP knew this was going to happen was he had called all the loans on all of the traders. The floor traders borrow money to do their trading. And JP had called all the loans due. So all the traders had to sell stuff to come up with money to pay for their loans. So they knew there was going to be this massive sell-off in the market. It was totally precipitated by JP Morgan. This answer Grok gave me it kind of freaked me out. At first it says, it was not J.P. Morgan. And I thought, oh, that's so typical of Grok. But then what Grok said next was like, oh my gosh. Instead, the Federal Reserve played a role in tightening credit by pressuring member banks to curtail speculative call loans, which are the short-term loans used for buying stocks on margin. And basically that caused all those guys to do the forced liquidation, exacerbating the downturn. So it wasn't JP. JP Morgan basically got his instructions from the central banks, is what Grok is saying. I thought, wow, Grok, that's so sweet of you to be so honest. This Fed policy of direct action to curb the stock market bubble is often it's often cited as a precipitating factor, though not a deliberate initiation of the crash for malicious purposes. Oh, no, 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 no. It's merely a policy response that backfired. Now that's more Grokish. Like, that's what I was expecting from Grok. So I said, well, Grok, okay, so this wasn't deliberate. Are there other historical examples of this type of bad policy that backfired? Oh, yes. Grok goes on, and he gives or she or it gives a whole bunch of other historical examples where bankers or central banks or those type of entities, they wouldn't have been called that necessarily historically, have been accused of initiating or precipitating financial crashes through actions like calling in loans, tightening credit, or implementing restrictive monetary policies. That include the Panic of 1819. That was, I'm not going to go into the details on that. Then there was the Panic of 1837, and that one involved the Bank of England. Anyway, it goes through some others, the 1973, 1974 stock market crash. Grok didn't mention the 2001 with the dot-com bubble, but that wouldn't surprise me. But he also does talk about the 2008 thing. In the market context, the lead up to 2008 financial crisis saw the U.S. Federal Reserve raising interest rates and tightening money supply. So there you go. Just policy that backfires, not malicious. No, no, no. All right, so anyway, it goes, these cases highlight a recurring pattern where central banks' efforts to rein in excesses through credit restrictions have inadvertently, or in some critical viewpoints predictably, triggered crashes, though mainstream histories emphasize policy errors over deliberate orchestration. Of course, histories do, because we don't know jack shit about what our history is. We're given all this stuff from, the central bankers, basically. They get to write it however they want. Anyway, so I go, okay, Grok. So this is a recurring pattern. When will it happen next? And what are signs that we are entering into the great everything bubble bursting and precipitating these central bankers taking everybody's stuff? So Grok gave me some good signs. The velocity of money flows. So money moving rapidly, things means are looking good, and the velocity slowing is a very bad sign. And I asked for the current status. As of January 2026, the velocity of money remains historically low, like prior to the Great Depression lows. So, oops, okay, there's one. Yield curve inversion. For those of you that don't know what that means, an inverted yield curve means that the short-term rates are higher than the long-term rates. And this has historically preceded recessions by 12 to 24 months. You know, we never have depressions anymore. You can't possibly have it. It's all a recession. Anyway, as of January 2026, the yield curve has normalized, but it had a record long inversion that ended in early January 2025. So we've had the 12-month period and we're into the 12 to 24-month period. So ding, red flag number 2. Okay. Central bank gold purchases are another key indicator that this is very likely to be coming soon. And indeed, central bank gold holdings serve as a signal of diversification away from fiat currencies, especially the US dollar, and preparation for uncertainty, often viewed in great taking style discussions as the elites positioning for instability. And indeed, the central bankers have been aggressive net buyers since 2022, accumulating over 1,000 tons annually, which is roughly double the prior decade's average, and they've been buying and stocking this up for quite a while. The momentum is expected to continue well into 2026. Okay, so ding, there's a third one. All right, asset bubble risks. I mean, it's stock market imploding. I don't think you have to be a rocket science at all to know the stock market is completely overvalued. And, all kinds of surveys show investors see the AI tech bubble as just the top 2026 market risk. So that will wipe out trillions in wealth right there. And then that bubble could absolutely cause the whole banking institution to implode on themselves and trigger the whole great taking. Here's another one. So asset bubble risk, we're there, So you start seeing the stock market tanking in short, quickly, then you know that this is what's in play. You probably don't have much more than a few days at that point. Unemployment trends and consumer health. So rising joblessness, even modestly, will confirm a slowdown. Now, Grok went on to say how no, we fully expect employment to tick up in 2026 and everything's fine. I'm like, no, they are lying through their teeth about unemployment numbers. You remember just last week I was talking to you about, so there's so much less beef now. We have the less cows in the United States than we've had in 75 years. And one of the consequences of that is Tyson Foods, one of the four only meat processors in the United States, just laid off 4,900 workers in 2 meat packing plants because there's no meat to pack. So, and that's just one tiny, the bots and the AI. So joblessness. So ding, rising joblessness. Okay. So one other sign that Grok did not mention, which I'll get to here in a minute, and this one is the ultimate sign. So I said, Grok, is this all ready to be executed right now? Like, are all the legal stuff in place? Is this like, could they pull the trigger today if they wanted? Oh, yes. Yes, according to David Rogers Webb, all the necessary legal and systemic policies are fully in place, and central bankers, along with the broader network of secured creditors and financial intermediaries, are ready to execute the great taking of collateral during a financial collapse at any time. So they are ready to go. By the way, this work began more than 50 years ago. The framework has been meticulously constructed and harmonized globally, and no further changes are needed. They are the situation, and Grok even said this, it's positioned the system as a trap ready and waiting to be sprung once widespread failures trigger the mechanisms. So you might ask yourself, has this ever happened before? Like, or is this a new thing? And I need to talk to you about 1933. So in 1933, from March 6th to 9th, there had been some the banks were starting to have some runs on banks, and some banks were failing. And Franklin D. Roosevelt declared a banking holiday. Doesn't that always sound so nice? A banking holiday. And prior to the holiday, there were over 25,000 banks in the United States. After the holiday, only 2,000 were allowed to reopen. Yeah, not even 10% of them. Eventually, another 4,000 opened, and I asked Grok, what happened to the other 19,000? And Grok just kind of got a little wombly on it and said, oh, well, it might have merged or something might have happened, But basically, millions and millions of Americans lost all their money and their homes, which the banks let them rent their homes back. Wasn't that nice? The reason they lost their homes is because they still had mortgages. And if you don't have money to pay your mortgage, they foreclose on you. So they just did this mass foreclosure on all kinds of people right in the middle, 1933. We're talking Great Depression. They took so many homes. Now, the two things about the Great Depression that I had always heard about, and I didn't really understand the impact of this until I read The Great Taking. And one was, everybody said nobody had any money, no money at all. And I always wondered, where did the money go? How did it get to be that nobody had any money? Because, you spend some, I buy some, it kind of goes around. Well, they had no money because all their money had been banks, and the banks were shut down and took all their money. So there was no money. Okay. The other thing they talk about is never go into debt. These were people that lived through the Great Depression. They were all like, never go into debt. And I always thought, well, that's a good general warning, but I mean, they were like phobic about debt. And that is because if you had a debt on your house was taken from you. It didn't matter how much equity you had in the house. They took your home. They foreclosed on it because they took your money and you couldn't pay for your mortgage, right? Are you seeing the picture here? These are the central bankers. All right. So when will this occur? I've already showed you like 5 signs, ding, 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 ding. Like we are right there. It could happen at any moment. And, it took them 5 decades. So clearly they work on a different time scale from you and I. But I think we're really, really close. And I have a couple more indicators. But one thing to, you've heard the saying from the World Economic Forum of, by 2030, you'll own nothing and be happy. And I always wondered, how are they going to do that? How do you own nothing, right? Well, this is how you're going to own nothing. They're going to take everything away from you in this way. I'm wondering how they're going to do the be happy part, except for maybe there'll be like massive amounts of marijuana given out or something. I don't know where the be happy part is going to come from. But I definitely get the you'll own nothing thing. So, you've heard that statement. You've seen that happy little guy. Yeah. So this fits right into that whole picture that we've all been seeing for a long time. So the ultimate trigger. Let's talk about the ultimate trigger. And this is how you'll know exactly that it's coming. And you'll probably only have days, maybe weeks, to prepare at that point in time. Oh, by the way, so we do know this is going to happen before 2030, and it is 2026 right now, so it's definitely going to happen in the next 4 years at least. I'm guessing this year. So in the Great Taking book, failures play the pivotal role as the trigger mechanism for the automated taking of collateral. And Webb argues that the legal and structural setup, we don't need to go through that, is designed precisely for widespread institutional failures, especially in a deflationary collapse where cascading insolvencies allow secured creditors, ultimately those are the central banks, to sweep pooled client assets as collateral without owner recourse. So that means they're just going to be able to, they've already got the laws all set up. They've already got the electronic everything set up. They've already got the clearing houses. This thing is just set up to run on automatic as soon as these cascading series of financial institution failures starts happening. They're not going to even have to do anything. It's all set up and ready to go. And you will have no recourse. So I want you to note one other thing. If you're in Bitcoin, get out of Bitcoin, please. Bitcoin, gold, and other liquid assets will be sold off. That's a part of a legal requirement. When a bank or a business goes insolvent, they have to sell off whatever liquid assets they have to try and pay their creditors, which is ultimately going to be the central banks. But by law, they have to. And so you can expect Bitcoin to crash, and you can expect gold to take a hard hit. I think gold will come back because I believe that's going to be what is going to back whatever other currencies we have coming. Yeah. Now, silver, I got a couple of things to say about silver. First of all, silver is too precious, and very few banks actually have any physical silver. Like nobody has any physical silver hardly. Actually, it's so fun. I was at a lunch, it was about a year or so ago. It was one of these, whole bunch of wealthy people get together and they talk about investments and they kick around ideas and strategies for investing and preserving their wealth, especially in this time frame. And happened to be sitting next to a gentleman who was an investment manager for a very, very wealthy family in the Netherlands. He wouldn't say who, and I wasn't going to ask, And he says, oh yeah, they're buying gold like you won't believe. They're buying gold like crazy. I said, well, are they buying any silver? And he's like, nobody buys any silver. Silver's not, nah. He didn't think very highly of silver. And I said, you know why they're not buying silver? And he actually didn't really want to know because who was I? I was there the one teaching people how to grow food, right? So, whatever. I get put in that little thing. The reason that they weren't buying silver is you can't buy silver at scale. You couldn't buy silver at scale even a couple of years ago. So that's the reason they weren't buying silver, is because you can't. So anyway, everybody's been buying gold. So silver, I don't think silver is going to take a hit. And if it does, it's going to bounce right back again. By the way, your silver mine, your shares in your silver mines, and all, it's going to all be shut down. Exchanges will be shut down. Everything's going to be shut down. So, that don't even think that that's going to be a game that you could play. I don't know. I guess if you maybe got some shares in a silver mine and then got the physical certificates or something like that, I don't know. But even then, we're probably going to see the nationalizations of mines and things like that. Governments love to do that, and governments are basically one arm of the central bankers. So anyway, silver, the other thing I wanted to say about silver is a huge indicator that the banking system will soon collapse, right? Because the banksters, one of the reasons the price of silver is so low right now, go buy some silver. I don't care if it just dropped a little bit, 20% or whatever. Go buy more silver. It is a blessing and a godsend that you can buy it for under $100 an ounce now, because it really should be valued higher than gold. And the bank they've got all these short positions and they've got all these derivatives, and the price of silver, they're going to have to declare force majeure and shut down the thing and try and get out all their contracts. They may be able to do that. The price of silver could go up and them be able to dance around it for a little while longer, but the price of silver going up is your key indicator. We're very close to the banking system collapsing. So on a personal note, a friend of mine, I was explaining this whole thing to her, and she was like, well, Marjorie, my mom gave me an inheritance, and my mom structured it so I get a chunk every year for 10 years, and it's with Edward Jones, and is that going to be all? I'm like, no, that's going to be all gone. You're not going to get a penny of that. It's going to be all gone. Like, she looked pretty sober after that. So where are we today? And I want to point out that We just had the first banking collapse of the year, and that was actually specifically the headline in January 26th. The headlines read, Metropolitan Capital Bank and Trust marked the first bank failure in the United States in 2026. Now, there were a couple of things about this. Now, one bank failure does not mean anything, right? Remember in 2023, we had Silicon Valley Bank. We had, like with 3 or 4 kind of substantial regional banks go under. That all got patched up. In 2024 and 2025, there have been some banks going under, but you would have had to been really paying attention. It was kept hush-hush. It was taken care of quietly. That wasn't, so there have been some banking failures, but it's been very, very, that we don't want anybody to know about it kind of a deal. But so the thing about this headline that struck me, and one bank going under is not any reason to be alarmed, but it is reason for you to be on alert. One was, this headline is all over the mainstream media, right? They blasted this out through their megaphone. I thought, oh, that's very interesting. And the second is the way the headline was written. These writers, they aren't even trying to change the headline anymore. They all get the same stuff out of the same spigot. And they used to at least try to change the headline up a little bit to make it look like they might be slightly independent or different. They're not even doing that anymore. It's the same headline on all of them. Yeah. And so they're blasting it out. And the other is the headline itself is, it marked the first bank failure in the United States in 2026. Like, we're counting. So, I'm going to be keeping a close eye on this. I really recommend that you do too. When we start to see more bank failures and we start to see the media whipping up a foment, especially if you start seeing any bank runs, that's it. We're close. And as has often been pointed out, these banking holidays, I wonder what they'll call it this time, will usually occurs over a 3-day weekend. So a lot of us for the past quite a few, and this was talked about in I can't remember, was it a FOMAC meeting or an FDIC meeting? It was talked about in a meeting, and these things are publicly available, although nobody watches them except for a few of us. And they said, yeah, well, we should do this. We should do this over a 3-day weekend. I mean, so. 3-day weekends. Don't go to the lake. Or if you go to the lake, make sure you got everything secure. All right, so the red flags: velocity of money, yield curve inversion, central bank buying gold like crazy, asset bubble, rising unemployment, the price of silver, and now the first bank of the year. Yeah, so I think it's going to be this year. And, I do. I think we're really, 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 really close. So what does this look like when this happens? There's lots of stories of 1933. Like, everybody's like, I can't pay my rent. I can't buy groceries. And that was back when people still had a lot of cash, right? Like, we still used cash. There were no credit cards, right? But all your money gone. Mostly everybody's money is completely gone. 401ks, IRAs, brokerage accounts, credit cards won't work. Lots of grocery stores now are so automated they don't accept cash. So that, it's that. I don't know how long they're going to let that kind of chaos go on, because I think, we've all heard about the CBDCs, right? They want to bring in the CBDCs to save the day. And I need to get an update. And if you have one, please put a link down in the comments below on. I'd heard that they actually wanted to execute this a while ago, but the CBDC system wasn't ready yet. So, yeah, right? Don't we all have problems with software? I can totally relate to something not being ready yet. I don't know what's the status of the CBDC thing, but supposedly there's accounts already set up for everybody in America and probably most other countries, and bam, they'll just turn that on and fill it up with these CBDCs, and then we're going to do that great switch. CBDCs are just basically another fiat currency. They're just a digital form of a fiat currency, so that's, that might patch over that moment. But then it's it's not going to stop the inflation and hyperinflation that we're already into the inflation part. And it's not going to stop the famine, which, I was shocked just today popping into the grocery store to buy some cat food at like the things they're doing to make the shelves look fuller and things that are missing. And, I mean, we're all getting used to that now. But, go in there and look. Like, really start to take a hard look at the different places you shop at. Yeah. Um, so I also think this is going to be different from 1933. Like, there were a few people in 1933 who understood what was happening, but by and large, most people did not know. They did not realize the whole thing was being orchestrated by the central bankers. Um, they thought that, well, there was just bank runs, and it's due to the people, and it's all the people's fault. And, um, and then this whole situation happened, and I just happened to be unlucky or whatever. There are way too many of us now that really understand what's going on and have a good sense of it. And then the work like of David Rogers Webb to get this information out, I highly recommend you go to that website, thegreattaking.com. And I'm trying to get his contact details to do an interview with him. And if you have any questions for him, put them in the comments below, and I love the comments, and I will definitely read those and use them in the interview with him, if I can get one with him. So anyway, yeah, in 1933, there weren't many people that thought outside of the narrative because nobody really knew there was a narrative. Now we know there's a narrative, right? We're in the apocalypse, which is the lifting of the veil, and there are way, way more people who are aware of what's going on. They may not know the details like this, but they know something's definitely stinky. And yeah, and that whatever happens is not just some accident and their bad luck. So I think that is why the ultra wealthy have those underground bunkers. I don't think the ultra wealthy are worried about the asteroid hitting the Earth and having to survive, or nuclear or whatever. I think it's because they realize that they are going to become hunted. And there are, lots and lots of people who have nothing, and they have nothing left to lose. So I think that's what the ultra wealthy are afraid of. All right, so the bottom line is, yes, we are going to continue in this slow grind down, and then there definitely will be a rug pull. And they've been planning it for 50 years, I can promise you. There's going to be a rug pull, and it will be a sudden, sharp, like, undeniable, the world has changed, and it's going to just get rougher and rougher beyond that. So you know all the basics. I've got that free webinar, backyardfoodproduction.com. That's my contribution to people. I condensed 20 years of figuring out the fastest and easiest ways for somebody who has no experience, maybe they're older, they're out of shape, how to grow food in a backyard. Get a start on that right now. Buy seeds. Lucinda Bailey over at Texas Ready Seeds. I'll have the links for you in the description here. They have the best prices. The seeds come packed really well. They give you generous quantities. They're viable seed that you're going to be able to collect seed from in the future. They're not, GMO or anything like that. Buy silver, right? A lot of bullion dealers are going out. They don't have any stock right now because with these lower prices, everybody's drumming in. But like sdbullion.com ships all over the place. jmbullion.com. Some of the big ones. Money Metals. Some of our people here in our community here have been saying they've used them. I've actually used them. Anywhere you can buy it. Thrift shops, flea markets where somebody's got some silver plate or somebody's got some silver. Get silver. Nickels. Go into, let's see, do I have any right here? No, go into your local bank and get nickels, pennies, keep saving your change. The prepper thing, right? Get your food together, get your medicines together. This is it. This is the year that it's going to happen. They've been working on it for a long, long time. The trap is ready to be sprung. We've already have these 5 indicators that are clearly indicating it's time, and the final indicator will be more and more bank failures. So, don't wait until we have the 10th bank failure to do this. Get started today in preparing for this. And yeah. All right. Well, yeah, it's we're in for some really, really big changes, and I really have done my best to help you as much as I can. We have to, because they're trying to subjugate basically all of humanity. Good grief! Can't believe I'm even talking about this stuff. All right. Well, I don't know how to end on a happy note on that one. Oh, it looks like the sun's going down here. All right, I got to go take care of some livestock out in the yard. This is Marjorie. Take care. Prepare like you've never prepared before.